Is the Federal Reserve out now with the second part of its report on the health of the U.S. banks? Our Peter Barnes is standing by in Washington with the details. Peter.
Well, hey, Melissa, the Fed has rejected the capital plans for the U.S. subsidiaries of two big foreign banks, Deutsche Bank of Germany and Santander of Spain. And among U.S. banks, it's told Morgan Stanley to go back and try again on its plan without outright rejecting it. The 30 other big U.S. banks and U.S. operations of foreign banks the Fed reviewed won its full stamp of approval for higher dividends and stock buybacks if a bank wants to do those. Morgan Stanley can proceed with those now, too, if it wants to, as it revises its plan, but the Fed can halt them later this year if it does not approve the bank's revised plan. This is the second part of the annual stress tests of banks with assets of more than $50 billion to make sure that they survive a major economic hypothetical downturn like the one we had in 2008 to prevent future taxpayer bailouts. On Deutsche and Santander, the Fed rejected their plans not for lack of capital, but over qualitative concerns for weaker internal controls and risk management. On Morgan Stanley, it must resubmit its plan by the end of the fourth quarter of this year to, quote, address certain weaknesses in its capital planning processes. David and Melissa.